There is a global stock market rally, and it is interesting to understand what is driving this stock market rally. This stock market rally is not being driven by the investors, institutional investors, but mainly by the retail investors across the world. And where are these retail investors investing the money? First of all, do understand that this is a new crop of first-time investors which have cropped up, and the lockdown conditions, they are sitting at home, working from home, WFH, as they call it in common parlance, and sitting at home and with apps available with low cost investing, zero cost investing, zero brokerage. They are naturally thrilled to enter the world of investing and make money while nothing else is working, while they're facing salary cuts, job cuts, and what not. So where are the new crop of individual retail investors? Where are they putting their money? They are putting the money in the highest leverage companies. The companies which have the highest leverage are seeing the most amount of the investments by these new crop of retail investors. Why have they selected this new crop of retail investors? Why have they selected these highly leveraged companies? Because the highly leveraged companies are tempting betas. What is tempting betas? That means they trade at higher betas. What I'm trying to tell you in simple parlance is that when a stock market goes up, these highly leveraged companies, they rise fastest. So they would go up in a jiffy, whereas the other, which are not leveraged, they would rise much slowly in this period. This is a far cry from the early part of the year, when in the initial stages of the COVID-19 pandemic, you found that companies which were deleveraged, they were doing very well. Now the complexion of the rally has rotated around new individual class of retail investors, and they are putting their money in this new the highly leveraged companies, and the loss-making companies, the travel companies, the cruise companies, and this is across the world. So especially the leveraged bets, whatever has got leverage, whether it's in telecom, whether it's in retail, they are doing very well. The Bloomberg index of the 30 most leveraged stocks in India, for example, has gained 32% since the end of March. This is compared with a 28% advance in the S&P BSC index. So much more you find rise in the leveraged stocks. The basket of the 30 least leveraged companies similarly compiled using the debt to asset ratios and excluding lenders has gained only 18% this year so far. This big change is, of course, as I explained to you, big change is from the early part of 2020, when the pandemic fears put premium on companies with strong balance sheets and low net debt on record. Okay, so companies rallied. The retail investors have flocked to go and meet those companies and invest in those which are the most beaten down stocks. Is this phenomenon, which is something which is only in India but across the world? I would say it is a global phenomenon. In the United States, the Russell 2000 index, of which are estimated 40% plus of companies are the loss-making companies. They have jumped 25% in the April to June period, its best quarterly gain in nearly 25 years. So you find companies, travel-related companies, the cruise companies. Nobody's going on a cruise these days, but these are the types of companies which have been outperforming the overall index. Yet, you have that governments across the world have unleashed a great amount of stimulus. India announced $21 trillion stimulus in the month of May, while the Reserve Bank of India has provided and announced liquidity boosting measures of over $9 trillion rupees since the month of February 2020. All this money has gone into many places, yet yes, some of them have gone into the pockets of retail people. Some of it has gone into infrastructure, and much of it has also gone into the healthcare provision. But much of the money that has gone into the pockets of the retail investors is going into these leveraged companies and is fueling the stock market rally. Now, as you know, the betas of these companies are very high. So while the stock market is doing well, these companies will continue to do very well on a relative basis. However, once the music stops, the party comes to an end. These stocks of these companies, the leverage companies, will also fall the most. This is something that you need to be extremely cautious about, that the quality of the rally that is taking place is rather circumspect. Now, there is a good quality. For example, on Nasdaq, you have a lot of tech names such as Zoom Communications. You have Amazon, which has done very well in this period, providing goods to online provision of many things to people who are sitting at home, and has done excellent across the world. Amazon, these are justified. Yet there is a great amount of this rally which is being contributed by these low quality stocks. And this is where sooner or later, if you stay tuned, I'll tell you when this global stock market rally, when it falters, it's going to badly beat these highly leveraged stocks, and lots of retail investors, the new entrants, as always before, are going to be burnt very badly in this fall that is going to come at some point of time. I will explain to you in my future videos. Please be a part of the Art of Investing course family. We have participants, and also be a part. If you have not subscribed to my channel, please do so. We'll continue to discuss when this rally is likely to falter, and when it falters, it will falter big time. Happy investing. Take care. Bye bye.